Good afternoon, ladies and gentlemen. This is G. Balaji, Company Secretary of ESAB India Limited, and it is my pleasure to welcome you all to this 38th Annual General Meeting of ESAB India Limited, be held on virtual mode. With the permission of the Chairman, it is also my pleasure to introduce our beloved Board of Directors and other dignitaries who have joined this virtual Annual General Meeting. Mr. Kevin Johnson, who is the Chairman of the Board and also Chairman of Risk Management Committee and a member of the Audit Committee, the Nomination and Remuneration Committee, the Stakeholders Relationship Committee, the CSR Committee, has joined this meeting from United States of America. Mr. Rohit Gambhir, our Managing Director, who is a member of Stakeholders Relationship Committee, a member of CSR Committee, and also a member of Risk Management Committee, has joined this meeting from Chennai. Mr. Ramesh Rajan, Independent Director, the Chairman of the Nomination and Remuneration Committee, and a member of Stakeholders Relationship Committee, has joined this meeting from Chennai. Mr. Raja Venkatraman, Independent Director, who is the Chairman of Stakeholders Relationship Committee and a member of Audit Committee and Risk Management Committee, has joined this meeting from Bangalore. Ms. Kaveri Dharmaraj, Independent Director, who is the Chairperson of CSR Committee and a member of Nomination and Remuneration Committee, has joined this meeting from Chennai. Mr. B. Morgan, Director and CFO, a member of Risk Management Committee, has joined this meeting from Chennai. We also have with us our statutory auditors and secretarial auditors, Ms. Usha Parvati, representing Deloitte Haskins & Sells, has joined this meeting from Chennai. Mr. V. Magesh, representing V. Magesh & Associates, our secretarial auditor, has joined this meeting from Chennai. Both the auditors have given the report, and the report is a clean report. The members constituting the quorum are present in this meeting. The remote e-voting process was opened from 9 a.m. on 11th August 2025 and closed at 5 p.m. on 13th August 2025. The e-voting process is also now open when this annual general meeting is on. Members who have not cast their vote already may do so right now before the closure of annual general meeting. This meeting is held on electronic mode and hence no proxies are taken cognizance of in line with MCA circular and SEBI guidelines. I now request Mr. Kevin Johnson, the chairman of this meeting, to take over and conduct the proceedings. Over to you, Mr. Kevin Johnson.
Good afternoon. Welcome to the meeting of ESAB India Limited. The meeting is in order since the requisite quorum is present. Pursuant to the SEBI circular and MCA guidelines, the soft copy of the annual report of the company for the financial year ended 31st of March 2025 was sent electronically to the shareholders on the 14th of July 2025. There were no qualifications in the reports of the statutory and secretarial auditors. The statutory registers are available for inspection by the members at the website of the company. Welcome again to the 30th Annual General Meeting of ESAB India Limited, which is being held virtually. The annual report has been with you, and I take this as read. Environment, health, and safety continues to be of the highest priority at ESAB, as we strive to deliver the highest standards of safe working practices and minimize our impact on the environment. Your company has achieved a revenue growth of 10.5% and strong growth in profits compared to the prior year. This was achieved across key product categories, growth in service income, and exports of manufactured products from India. The company continued to leverage significant benefits from access to ESAB's global processes. Based on the financial performance and after evaluation of cash flow requirements, your board has proposed a final dividend of 42 rupees per equity share. During this financial year, 2024 to 2025, Mr. KB and Mr. Vikram Tandon, independent directors of the company, completed their tenure of 10 years and retired from the board of the company. We take this opportunity to thank them for their valuable contributions to the board. I am pleased to welcome two new independent directors, Mr. Ramesh Rajan and Mr. Raja V, who have been appointed on the board in the month of January 2025. Finally, I would like to thank the entire team of ESAB and our customers, suppliers, and other stakeholders for all their support during the year. There are the following 7 resolutions that have been placed before the shareholders to consider and adopt the audited financial statements of the company for the year ended 31st of March 2025, together with the reports of the directors and auditors thereon. Number 2, to approve a final dividend of 42 rupees per equity share. Number 3, to appoint a director in place of Mr. Rohit Gambhir, having DIN 066862250, who retires by rotation and is eligible for reappointment. Number 4, to appoint Mr. V. Mahesh, practicing company secretary, Chennai, as the secretarial auditor of the company for a period of 5 years from the financial year 2025 to 2026 to 2029 to 2030, and to authorize the board of directors of the company to fix his remuneration. Number 5, to ratify the remuneration to cost auditors of rupees 5,50,000. Resolutions number 6 and number 7, to approve material related party transactions with ESAB Europe GmbH Switzerland and EWAC Alloys Limited India. The company has been doing the transactions with ESAB Europe GmbH Switzerland and EWAC Alloys Limited India in its ordinary course of business and at arm's length basis for many years. The details of the past transactions are disclosed to the shareholders as part of notes to financial statements under the heading Related Party Transactions in the annual report. These 2 related parties are fellow subsidiaries to the company. Since the value of the transactions with these 2 related parties may likely exceed the threshold limit of 10% of the turnover of the company in the current year, the company, as an abundant precaution, seeks approval of the shareholders for a value up to 200 crores each with ESAB in Europe GmbH Switzerland and EWAC Alloys Limited India. Balaji, have there been any queries raised by the shareholders in advance? Can you share it with the board in response to such queries?
Yes, Kevin. There are a few shareholders have raised the queries in advance. So let me read one by one. One shareholder, Mr. J. Abhishek, his folio number and his DP ID number IN 301-637-413-59155. So he has raised a few queries. I would request Rohit to take up his question.
Sure. So the first question is that what will be the growth triggers in the first and second half? So, in the first half, as you would have seen in the results, at least in the first quarter, the demand was muted in the market. And however, we do expect that with the tax cuts and with the government capex cycle improving, as we move ahead in this quarter and the next quarter, things to improve. There are also geopolitical developments and some uncertainties, as we all know, which have a bearing on the sentiment. And that also we do expect to improve. So we expect that as we go ahead, the demand situation should be better. The next question is, what are the new innovation and product enhancement done by the management? So new product launches are a continuous part of our process, and there have been multiple launches across categories in consumables, in welding equipment, in automation and cutting. And the response, happy to say, has been pretty good. And that's how I think we have been growing more than the competition and do see a very strong pipeline in the future as well. Next, I would request Mohan to take the question, please.
Yes, sure. So good evening. So this question is on, please give the production capacity utilization figures in percentage, for the month of April, May, and June 2025. And also, what was the capacity utilization of last year and the last 5 years on a moving average basis? So broadly, we did have growth in 24-25 over 23-24, which is driven by volume growth across all the product categories that we had. And also in terms of April to June as well, as adjusted for seasonality factors, our production levels are reasonable, in comparison to the prior years as well, especially on the filler metals. And in terms of, the capacity utilization, we also have scalability within a limited range with some balancing equipment and, manning across various shifts. So overall, I think a pretty comparable level across the last 3 to 4 years, as adjusted for, some volume growth that we have here. The next question I also have is from Mr. Abhishek again. What are the cost-cutting initiatives and production enhancement activities done by the management? Now here, cost actions are taken across various dimensions. I mean, right from sourcing, the conversion cost as we measure it, in terms of what it takes to convert RM into FG across the plants. Then we also have the productivity enhancement actions that are in place to, improve the per unit, cost levels. We also have specific projects, and also we also have targets on the operating expense reductions, SG&A as we refer to it. So we work with a pretty good set of identified funnel of projects that have timelines defined for savings as well. So these are periodically reviewed, and obviously we've been on it all the time, really, in that sense. The other question we have is on, what is the view of the management going forward on the sustainable profit earning growth potential, in the coming quarters. So overall, what we've seen so far, there's a reasonable level of resilience in the economy, but we're not entirely insulated from, turbulences that we see all around us, really, including geopolitical developments and more recently the tariff-related developments as well. So I think largely success depends on our ability to adapt very, very quickly to the changing situation here with respect to costs and supply chain challenges, and continue to focus on, what customer-focused offerings that we always have been at. And also some of our product availability in terms of segments which are a little contrarian, cyclically a little stable, like an M&R, would help in riding a difficult phase sometimes when there's a downturn. So that's broadly how we see it right now. The next question again from Mr. Abhishek, what we have is on, what are the management efforts to improve working capital to sales ratio, ROCE, net debt, and also the EBITDA multiplier, also debtor days and interest coverage ratio. So as the shareholders would see, we continue to remain debt-free, and one of the things about ROC is also about the dividend policy that we've had in terms of assessing what is needed and having a distribution of whatever cash we think is not immediate requirement for the upcoming financial year or two. So these have helped manage our ROC. So the working capital, we do have challenges in terms of the supply chain related disruptions that we're seeing around us, and also occasional liquidity challenges in the market, which does put pressure on our day sales outstanding and inventory. But overall, I think in the context of what we've been seeing across the economy and with some of our listed competitors whose information is available, I think we still are in a pretty stable territory on working capital and cash flows as well. The next question is in terms of a very specific on the other current and non-current liabilities. Please let us know the details of that and also the contingent liabilities here. So the other current liabilities, as we've detailed in the annual report, has dues on the CSR at the end of the year, and also statutory dues primarily on the indirect taxes GST that we've collected, which we have to remit. So the contingent liabilities that we have, bulk of it comes from pending indirect tax matters which date back to quite a few years ago, where we await hearings and this are likely to take some time for resolution, really, because of their pendency at judicial forums with slightly long lead times. And the next question is in terms of what are the management efforts to reduce other expenses, legal, professional charges, and audit fees. Like, as with other costs, we continue to look for opportunities here as well, in terms of optimizing the cost structures here. Legal, professional, and audit fees, we also need to have the right quality of firms that we work with, given the emerging requirements and challenges. So it is a good balance in terms of, the costs as well as the quality of service that we expect from our service providers. So the next question is, what are the credentials that the new and existing directors are bringing on the table to take the company to the next phase of growth and to guide the next generation of managers? So is the appointment being done after checking all the amendments, under the LODR? So that's the question here. So the appointment, as the members would be aware, has been through a very rigorous process with the NRC and the board, and also the shareholder approvals as well. So we do believe that that they bring in rich and varied experience across multiple dimensions, and their contributions will be hugely valuable for the company going forward as well. And in terms of the details of their profiles, these were shared during the appointment process. Also, you would find it in various parts of the annual report as required here. The next question, again from Mr. Abhishek, is on what's the policy related to dividend in our company, as most of the senior citizens depend only on that. Now, I think members would be happy to note that over a 5-year period, the company has paid roughly about 386 rupees of dividend, really. So that's what it's a pretty 77 rupee per year or so of dividend that we've been paying consistently here. And as articulated in our dividend policies also, whatever is not immediately required for our business needs, we keep disbursing it. So I think even for the current year, it should show a pretty good growth that you would see in the annual report here from the prior years. The next question for Rohit probably is in terms of the industry in the next 3 years.
Sure, thanks. So the next question is, where do you see the industry in the next 3 years, and where our company will be placed within the industry as other players are more proactive and prudent? So first of all, thanks for the question. So if you have to see the last 3 years, before we get into the next 3 years, so the last 3 years our sales has gone up by about 50% and our operating profit has doubled. And I don't see that the other players in the market in the welding category have been doing that. And I think that even in the coming future, the kind of marketing initiatives that are planned, the kind of new product launches that are there, and the support that we get from the global group is putting us into a good position to further gain share in the market. We have some good capex plans also that will also help us in the future. Yeah, Balaji. Yeah,
thank you, Rohit and Morgan. Next shareholder, Aniket Mittal, representing SBI Mutual Fund, ID number IN 303786, client ID 1001929. I would request Rohit and Morgan to take up these questions.
Thanks, Balaji. And thanks for the question. So the first question is, what is the market size for welding equipment and consumables in India? What is the addressable portion for ESAB, and what was the market growth in FY25? So the overall market, we estimate it to be around 6,000 to 7,000 crores. And the addressable portion of this market, so, earlier we had about between 70 to 75% being addressable, and now we think close to 90% is addressable given our scale and how we are able to be in every segment of the market. This we continue to increase our addressability based on our new product additions and ensuring that we are present in all levels. The market growth for 2025 last year, volume growth would have been around 3 to 4%, and value total growth would have been around 5 to 6% if you have to consolidate the overall industry. The next question is, how do you see the growth in welding equipment and consumable market in India during FY26 and the next 3 to 5 years? So, again, taking back to the previous question, the last 3 years, we have grown by around 50% in sales. And I think that the growth in equipment is going to be higher than the growth in consumables because there is a lot of change in the way equipments are being used and sold in the country and the type of equipments which are being sold. The new technologies that we are bringing in, they are making it, that very good for the customers to change to the new equipments that we are having now in the range. I think that the market growth, this is linked to the investment cycle in the economy and the overall growth. So whilst we have grown, as I said, about 50% in the last few years, but I do think that the market, whilst might grow by around 6 to 7% in volume terms and around 8 to 9% in value terms, considering things remain good, I think that overall we will be seeing a decent growth thanks to a sort of a slow growth that we have seen in the last 8-9 months. The next question is, in the annual report, company has mentioned heightened in interest from emerging sectors in renewable energy, digital transformation and infrastructure. Could you elaborate on this and contribution on their revenues? So in renewable energy, our focus has been mainly on wind. So wind, where we have a very good product offering and we have a very high market share. And that is something that we are focusing on. In terms of digital transformation, a lot of the equipments that now are being launched are obviously not just internet ready, but also have various digital systems and processes that make welding overall easy. So there's a lot of work that is being done within Indian R&D also to help not just India, but the rest of the world as well. The contribution to the revenue, and I would not like to give specific figures, suffice to say that soon wind is a pretty decent portion, and overall digital portfolio in equipment is increasing at a very fast pace. The next question is, which are the top 5 end user industries and how much do they contribute to the overall market? What is the contribution from thermal power specifically, and what are the growth? So the customer base is very wide in welding. Bulk of it is what is deemed as general fabrication and specialized industries. So that is where bulk of the market is. So the end user industries are, as I said, are very, very wide with no one single segment other than general fabrication dominating. Regarding thermal power specifically, so thermal power, we have not seen any major new facility coming up. But there's a lot of business that we do in repair and maintenance in these thermal power plants. So we have a very good approach and a share in most of the thermal power customers in the country. The next question, how has ESAB's market share moved in the last 1 year and 3 years? And what are the end markets segments where ESAB would have gained and lost share respectively? What are the end markets where ESAB India is dominant positioning? So here, it's we don't like to get into specifics on in market share because this information is available in the public domain with many of our competitors being listed. And also some unlisted players where once in a year you can get information. We have a leadership position in various categories, in fact, in most of the categories. But I won't call that as dominant. It's a strong position that we have where we continue to work with the customers to ensure that the product offering and the price product performance combination is really good for them. Next question is for Mohan, please.
Yeah. So this is a question again from Mr. Mittal. It's about what is the breakup of revenues between welding consumables and welding equipment for ESAB? How has this mix changed over the past 1 year and 3 years respectively, and how do you see it going forward? Some of the industry trends, Rohit did cover in his earlier part of the questions about the equipment segment growing a little faster than filler metals and so on. But again, over the last few years, after decision taken globally in terms of the decision making CODM, as you call it, and LODR, I mean, we operate only in fabrication technology as a segment here. So while we do internal analysis in terms of product categories for growth and other improvement topics, we operate only as one segment as fabrication technology, and we don't think it's very appropriate to get into the equipment or filler metal share within this really for public domain. So the next question, I just request Rohit to take up here.
Yeah, thanks, Mohan. So the next question is, what are the new product launches in past 1 year, and what is their contribution to revenue, and what are the key areas for new product development? So in last 1 year, we would have launched about between 150 to 200 new products across categories. So this has been in filler metal, in equipment, PPE, gas equipment, automation, various categories. Contribution to revenue. So we don't just see 1 year what has been launched. We have a 3-year launches and how they perform, because that's the time it takes in this market, where the life cycle of the product would be between 5 to 10 years. So we see that about 25 to 30% of our revenue comes in from the products which have been launched in the last 3 years. We drive a lot of benefit, and what are the key areas for new product development? So these are across categories. I think that in all the categories that we work on, there are specific marketing and R&D teams working to launch new improved products in those categories. We also get a lot of support from the global group, which work on various new technologies, and then we customize them for our local markets. The next question is, how is the market divided between SMAW, MIG, MAG, TIG, flux cord wire and SAW categories in terms of volumes and value? Do we see a shift in their mix? So it will not be in our interest to share category level details, but the mix is now not changing between these product categories. So in some quarters, we see a higher growth in one category, and in some other quarters, we see a growth in other categories. So there was a time when it was that electrodes might not be growing, but we do see a good growth over there as well. So all categories we are seeing, a growth. I mean, obviously, in some categories, as I said, might be minor changes within the quarter. So the share of exports outside India has risen to 14% of revenue. What is driving this growth? And what is the outlook? Which product is ESAB supplying, and how do you plan to new add products? So exports have been growing. Actually, the base has been small earlier, and now opportunities continue to come in, and we are really ensuring that what all we can do in various markets to supply through our existing capacity itself, we are able to do. Next question is for Mohan, please.
Yes, sure. So this one is about, which are the key raw materials and finished goods that we purchase from parent, and, how do we see it going ahead? So, we have purchases from, multiple fellow subsidiaries around the globe, and it covers a pretty wide range of, equipment components, capital goods for, say, our welding, automation, cutting. We also have imports of special the growth, or how these numbers move across in future, does depend on the product mix, going forward as well. And details in terms of values by related party, I mean, they've been listed in separate pages in the annual report for the members to take a look. So next question, I would request Rohit to respond, please.
Yeah. So the next question is, we have seen a revenue growth of 10.5% in last financial year. How much of this is price led, and what were the price hikes taken in the past 1 to 3 years? So the growth has come in obviously from volume, price, and through new product addition. But the prices normally are aligned with the commodity price increases to the extent possible, and they are not opportunistic in nature. So we have been very mindful of ensuring price competitiveness whilst ensuring that our margins are protected and move up. Next two questions are Mohan, please.
Yes, please. So the next question is, we've continued to see an increase in gross margins in FY25. What do you attribute this to, and what are the sustainable gross margins and EBITDA margins? So as Rohit also articulated earlier, and the growth has come across all our key product categories that we deal in, and it's a combination of a good product mix and also a pretty strong focus on all the conversion costs and OPEX that we continue to monitor. And capex also, the members would note, barring the global R&D related building capex that we had. I mean, we've been at sustenance levels in terms of replacement, EHS and IT kind of capex spends that we've been having here. So sustainable margins, it's a function of multiple external and internal factors, including product mix, and it will be pretty hard to put a number to this. So we continue to strive to grow in a very profitable manner. So that's broadly what it is right now. And the next question was in terms of, what are the capital expenditure plans over FY 26 to 28, and in which areas would you invest? So in terms of, current and immediate requirements for, volumes or capacities, we do believe we are sufficiently invested, barring replacement of some of the aging equipment and some balancing equipments in our plants. And whatever we need to do, sorry, there's a bit of echo here. Yeah, would need to be on process improvements, EHS, IT kind of capex drivers. So broadly, I think for capacities, we do think we are sufficiently invested for now.
Thank you, Rohit and Mohan. Next shareholder, Gokul Makeshwari, ID number 12033900001999186. He has raised certain queries. I would request Morgan to address these queries.
Okay. So here, some of the questions which have come from other shareholders and addressed already will not deal with. I mean, I'll take up the newer ones which are here in this. So I think the first question here is about trademark license fees paid to the parent company has moved from 2.6 to 3.5%. Is this a new rate, or was it a one-off given the engagement? If this is the new rate, can we pass this on to our customers or adjust our cost structure to minimize the impact on margins? So the trademark fees, as members would recall, is currently at 5% of net sales, with some exceptions like we have articulated in the resolutions earlier. So this has been in effect from 1/1/2024. So in a sense, the full year impact is there in the financials with the revised arrangement. And therefore, it's not a distortion or one-off variance as compared to any of the past years, really. So it's only the rate change period comparisons that would be there, if at all. The pricing in the market, again, is a function of all the product attributes, the power of the brand, and also the positioning that we do here. So it's not something which specifically, comes to a cost kind of calculation on this. The next question I would request Rohit to answer. It's about automation.
Yes, so the next question is, one of the emerging trends is automation welding. How are we placed on this trend? Is there more competition for this segment? Are margins higher or lower in this segment of the business, and what percentage of revenue comes from this? So automation, I wouldn't call it an emerging trend. It's been there for a while, and we have been a pretty decent player in this category. And we do see, various applications where automation is required. They are actually increasing within the country, which really helps. So how are you placed for this trend? I would say that thanks to the support that we have and the technology that we have from the group, we are very well placed. So we have a good combination of mixing the technology from the world and within our local resources to make it absolutely suitable for India. Is there more competition in this segment? So it depends on the product category. There are certain categories which are more commoditized or generic in nature where there is high competition. But in the areas that we work in, we have a very good product offering. Are the margins higher or lower in this segment of the business? So as compared to rest of the business, yes, they will be slightly higher because these are customized products which are given to the customers and require a lot of work from our side as well. And what percentage of our revenues come from this? I would not like to specifically talk about percentage of revenue. Suffice to say that it's a reasonable portion of our business. The next question is, what is the share of Chinese players in the welding consumable business? So I would say it is very, very low, almost non-existent. So the imports in India are for welding products is relatively limited. Next question is for Mohan, please.
Yeah. So this is about, what has been the impact of BIS norms? Has this helped us gain share from smaller or regional players? So broadly, I don't think we had any significant impact on this. And, imports of steel and steel-based products are subject to regulatory changes from time to time. And there are procedures to comply with, which, sometimes does involve a bit of follow-up clarification and technical write-ups, but all within the normal course of business. So we don't have any specific point to mention on this. There are other questions in terms of gross margins, EBITDA movement over the last 3 years and so on, which have been covered in the previous set of questions. So I'll skip that. There's one on, is there a plan to merge EVAC into the listed company? Is there a product range in ESAB India which competes with EVAC, or is it complementary? So, we do not have any plans for, merging the two entities at all for now. And in terms of the product range, EVAC does have a presence in the maintenance and repair segment where ESAB is also present. I mean, there are products which are competing. There are also products which are kind of complementing in terms of the range here. The next question is about what is the expected growth of the industry for the next 3 years, and does the company expect to outgrow it? So historically, I mean, the growth rate has outpaced, the GDP growth and also the steel growth in the country, and it's a trend we would like to obviously maintain going forward as well. The future prospects would really depend on, the overall prospects for steel and fabrication-linked sectors, really. So there are multiple variables at play, and our intent, as always, is to, outgrow and outperform. Yeah.
Thank you, Morgan and Rohit. Next shareholder, Veena Patel, folio number IN 3030284923045. She has raised certain questions. I would request Morgan and Rohit to take it up.
Sure, so I'll take the question. So, the first question is, what's the current demand outlook for our products? So the demand last quarter was a bit muted, but still it continues to be strong, and I think we'll be, significantly more than competition. What is the competitive intensity in the domestic market? It is very strong. It always has been, and we do wish it always should remain so. And that ensures that, we also are putting the best possible products into the market. Market share in India, new products launched, this we have just covered this. Initiative taken to increase domestic sales. So again, we have kind of covered it, but it's not a silver bullet. There are various things about new products, marketing efforts, increasing distribution, a whole host of things which are being done. Future outlook for exports, this we have covered. Then current capacity utilization and capex outlay. So this capacity has been covered in capex. We have a healthy capex plan for this year and next year. And what would be the future growth drivers for the company? So one is obviously the market growth. That's extremely important for us. But we do see that a lot of growth coming in from areas where we were not very strong earlier, in advanced functionality machines, as was covered earlier, as in digital products. So there are various pockets where we can still significantly increase our share, and will continue to do so. There is one question, improving EBITDA margins. So I would request Mohan to take that, please. Question number 6.
Yeah. So again, reasons for improvement in EBITDA margins over the last 3 years, and what would be the sustainable range for EBITDA margins. So here, it's a combination of new product launches, growth in our existing product sales as well, and expanding the distribution channel. So everything that we've needed to do on that, we've been trying to do that as well. In terms of drivers for sustainable margins, obviously the commodity related challenges would always be there. I mean, volatilities in the supply chain, the overall fortunes of the manufacturing segment. I mean, all these would really come into play in driving the margins. From a advantages point of view, we do have a presence in the export markets at a pretty good and vibrant service income revenue stream, which is also helping us, hedge some of our forex risks and so on. So we do think we have a few good things going on the overall business environment, but there's still challenges that on the overall economic front that we'll have to deal with.
Thank you, Rohit and Morgan, for addressing all the questions of shareholders. Kevin, all the questions of shareholders have been addressed. There are no more questions. Over to you, Kevin.
Apology, and thanks, Mohan and Rohit, for answering the shareholders' questions. The results of the remote e-voting and e-voting exercise today by the shareholders will be announced on or before the 16th of August 2025 at the website of stock exchanges BSE and NSE, at the website of NSDL, at the notice board, and at the website of the company www.esabindia.com. I thank all the shareholders for their participation in the meeting, and I declare that the 30th annual general meeting has closed.
Thank you.
Thank you.
Thank you.
Ilango?
Yes, sir.
You can stop the record.